The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. Tommy O'Brien, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 31, Nasdaq's up 8.5, S&Ps are up 6. We have the gold contract down 7 at 1,068. We have silver down 10 cents at 13.77. Bonds, the 10-year down 15 ticks, 126.22, 30 off a full point, 6 ticks, 156.01, and we got King Dollar up 34 ticks at 97.64. And as we do each and every Monday, kicking off our show, we get our man, Mr. Kevin Hinks. And don't forget, folks, every Monday, Tuesday, Kevin has a great show right here at TFNN, 12 to 1 Eastern Standard Time. We do swim lessons. No commercial break, 60 minutes.
Scott Connor, Kevin Hinks, Cindy Faber, they're all doing their great program.
Absolutely huge. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Monday.
Hey, listen, man, I heard you guys get your bathing suits on in Chicago, that it's like 75 degrees out.
Buying Christmas trees in my shorts. Amazing.
That is wild, man.
It's not helping. It's not helping the Bears though, but it's helping everyone else.
That's a fact, man. I'll tell you, between the oil market and the gas market, man, that natural gas is banged out at 185 this morning. That's pretty intense, man.
Yeah, I wouldn't want to be in the winter coat business either in Chicago. That's a couple things having a problem today.
Isn't that the truth, man? No, there's no doubt, man.
Buckle up this week, Tom. It's going to be a bumpy ride, I think.
Yeah, we have the Fed Wednesday at 2 o'clock.
Right.
And, you can see, we had, one credit fund, folks, they put a gate up and they kind of get out. The second credit fund was smart. They got out. And it's going to be interesting to see. You know what's wild, Kevin, is that, the bonds they still basically won't give it up, man. I mean, it's pretty amazing watching the 10 and the 30 year, we're pretty close to highs.
I'll tell you why this is going to be so interesting, Tom, because for the first time I've been trading for 30 years. For the first time in my life, I can honestly say there's no history for what's about to happen here.
Right? Tommy and I were talking about this last week, and it's wild too, and I heard it in your voice too. It's very unusual, folks, when you can say that.
Right.
That when you're in the market a while, it's always different, but a little of the same. The cycles go over, but this is absolutely like what's going to happen, man. Right?
Right. How bumpy is this going to be?
Yeah. So, swim lessons this week. What are we going to be talking about this week?
Well, what we're going to do, when you come up with the genesis of every trade is some type of an opinion.
Yes.
So if you have a directional opinion on an underlying or an index or anything you trade, you can use options to do that, to take a directional opinion. However, we're going to show you a way to use other options to do it with using the least amount of capital.
Nice.
Right. So we're going to give you capital efficient directional option strategy. Scott and I and Cindy are going to talk about it, the best way to do it, using the least amount of money.
And, what a week to do it. I mean, because
I'm going to be listening.
Whether you're a bull or a bear, you better be strapped in, because this market.
The Dow just jumped 20 points in the last 4 seconds. 30. Look at something. Yeah. I mean, literally, it was just flat. So this
Tommy,
now it's back.
That's what you're going to see for the next couple of days.
Now it's down 20. I mean, literally, I don't know what's going on, but that just literally in the last 10 seconds, it was up 30. Yeah. These are some spikes. Look at this. The liquidity
is just going to be wafer thin for the next couple of days, because no one wants to get in front of this freight train.
Wow.
Yeah, Kevin, just as you're saying this freight train, as Tommy started, it was up 20. Now we're down 53, and we were down 73.
Yeah, these swings are not going to be for the meek this week.
But that's where, that's where opportunity does come in the marketplace, folks.
Absolutely.
And you can definitely learn from it, too. Seeing how everything moves together, even if you're not trading it, there's...
Huge point.
Yeah.
Huge point. And what Tommy's talking about, folks, is you can be I think you can be one of the best traders around, but you got to go through a few cycles. You have to see that type of volatility because it's a.
And I think when you're talking about options, that just how the premiums are working with those types of volatility swings is a cool deal to witness.
No doubt.
Yeah.
No doubt.
Yeah, look at the VIX is already up, up $1.30 already this morning, and guess what? I don't see that backing off much. It's gonna stay at nice elevated levels here for at least till Wednesday afternoon. And
man, that thing really popped last week. I didn't realize it popped that.
It's a big day.
Whoa, baby!
It was just grinding higher.
Look at
the
that.
end of the week.
If we take a look at the Monday, folks, Monday it was at 1469, and you're at 2561 right now, and of course Friday was the monster.
It was a scary week, right?
Wow,
right?
Pretty amazing, man.
Right.
So 12 noon, folks, every Monday, Tuesday, you're gonna get a great education. Now, if you haven't test drove the Thinkorswim platform, folks, just go do it. It's an awesome platform. Okay, you can test drive it. The banner's right now site, whether it's the top or the side of it, and it doesn't matter what you trade. It's on one platform. They'll put paper money into your account. You can trade with paper money and see.
I think for questions as well, people can email swimlessons at thinkorswim.com. I think that's it. And you guys access that live on the show, Kevin? And
right.
Swim lessons at
we answer those questions on the show, and we answer the emails.
Yes, that's awesome.
Right.
Okay.
So that's any question right now. You can email them, getting ready for the show, whether it's between 12 and 1, swimlessons at thinkorswim.com. And talk about whatever you want to, what you're trading.
That's perfect.
We love having TFNN questions
Get
and
them in there.
listeners
That's
on
right.
board.
We love grooving out here with you and getting a great education, man. This is going to be a wild week. Hold on, folks, man. This morning, Kevin, I think what threw the market for a quick one, too, was J.P. Morgan come out with saying that the Apple supply chain is weak. So it's like, it's interesting because Apple only has to move 2 points that dents these indices pretty quick.
Sure.
Exactly. And how about this, Tom? Barron's came out Saturday saying Apple could rally 30% next year.
Wow, man. There's the yin and the yang.
So talk about cross currents you're getting.
Whoa, baby. That is definitely the yin and the yang. Unreal.
Yeah.
Unreal. Well, listen, I know I don't have to tell you to keep warm because the bottom line is that across this country, it's when I was coming into work, I believe they were using your hometown in Chicago, saying exactly what you said, that people were getting Christmas trees in their shots this weekend.
Yep. Amazing.
That is crazy, man. That's nuts. So much for natural gas, right?
Yeah, oil, exactly.
I'm telling you, it's wild too, folks, okay? Defined risk strategies are so where it's at, because if you were, whether you trade natural gas or oil, guess what? That was a one-way trade.
Yes.
And it's much nicer being in a defined risk category. My God.
And that's really, when Scott and Cindy and I are in there, that's the only thing we ever teach is defined risk. Because that, if you get some big event and you get some large movement that's bigger than you expected, you're defined. Right.
And there's a lot of moves.
You live to trade another day.
Even in, whether it's indices, but especially in equities as well, in terms of, I always look to the right. He's got the big downers. Well, there's some biotech that's down 30% today. There's always a few companies that are down 15%. And the indices are really can move 2%. We saw on Friday.
What I was taught as a very young trader, guys, your number one goal when you go down in the pit, or today when you turn on your computer, is to be able to turn it on the next day by defining your risk and keeping your risk manageable.
Great point. Well, listen, since Kevin, Tommy, and myself have been on, folks, okay, which is approximately 12 minutes, right?
I know. I've just been watching the numbers. It is amazing.
I got to give you these numbers because if you're in your car listening to us, folks, okay, we started with the Dow. The Dow was up
like
20.
Yeah, it was like flat for a
went
while.
down 70, went up 50, and now we're down 8 again.
Yeah.
That's where option strategies are totally where it's at.
Right. Tom, it's like riding a wild tiger. You'd love to get off, but you have no idea how.
Oh, my God. Unbelievable. Well, listen, folks, all you folks out in the West Coast right now, I know it's 7 o'clock in the morning, you're driving to work. Remember that you can get us right on your cell phone. You can get Kevin on your cell phone, noontime, so it's 9 o'clock your time, TFNN.mobi. You want to get Tiger TV? Just go to TFNN.com, hit Tiger TV right there. You'll see all their charts. You'll see the strategies.
Yep. And email the questions. Swim lessons at thinkorswim.com. There you go.
Perfect. Well, listen, man, you have a great one. Have a safe one. Buckle up. We will be buckled up listening to you.
We look forward to the show, man.
All right, guys. Can't wait to talk to you.
Okay.
Thanks, man.
Take
have
care,
a great
Kevin.
one. Have a safe one. That's unbelievable, man.
I know. I wasn't talking at portions just because I was watching that number. I mean, it would literally go from flat to the Dow being, and I was just watching the Dow because that's the biggest number.
Yeah.
They're all jumping. But the Dow was up the most as well, and it would go down 40, down 80, down 40, flat, up like 35.
Folks, this is just, I mean, I've seen volatility, but this is...
It's that whole bar.
So the S&Ps just went 21 points.
1%. It's over 1% bar.
And it's still the same bar.
Yeah. And what is that?
That's a 10-minute bar.
Right. That was the time from when. That's basically. I mean, it's 10:17.
Yeah.
The show starts at about 10:07. We've only been on the air for 10 minutes in that hole, and now we're back to flat.
Whoa, baby, man, this is intense. Let's see.
I thought I was going to look down. I was going to say 10:30, and I was like, did a number just come out at 10:30? That because 10:30 is a lot of numbers come out at, right?
Exactly.
So 10:10, no, that's nothing. Unless somebody said something. That's a lot of action for nothing. So we'll see.
There's no doubt.
Maybe during the break we'll see if we can find what at least people are.
Yeah. And I expect what we're going to find is
Can you go pull up the den as well? See what? Maybe,
there's going to be some.
They got to be chatting about it in the den.
It's got to be like a liquidity event, meaning that these bankrupt bonds, high yield bonds, are going to be a real problem. We'll talk about that when we're coming back. Dow right now down 14, folks. Nasdaq is off 9. S&P's flat. And if you just woke up and they're flat, that would look pretty good. But guess what? They've moved 21 points up and down in the last 10 minutes. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 25. You get the Nasdaq off 13. S&Ps are off 2. And if we go over, we were talking about last week. You had the South African equities. You had the Rand dollar go higher in price, which means that it's getting much weaker. And overnight, last night, bottom line, the Rand had hit 16 Rand dollars to $1 US. And then what happened last night, folks, it would be daytime in South Africa, is that the Prime Minister gave the guy his... the finance minister's job back.
Which was the whole reason that the spike in the weakness of the Rand last week.
That's correct.
Because he had fired him.
Because he had fired him. Now, the Rand is pulling back, but it looks to me like it's setting up a larger move to the top side. And if we go over to Harmony, we take a look at Harmony, because Harmony just was a one-way move coming off the bottom.
Talk about some trading opportunities if you just nailed that right. If you just were in it somehow and said, not only am I going to take my money, but I'm just going to short it looking for a retracement or something like that. There had to be people out there that could do that. You want to talk about defined risk too, right?
That would be right. Well,
I'm just saying what movement. It's not
that's right. Just a low stock. It was only like $1.
Okay.
So that would, you know what I'm saying?
Okay, yeah.
But what does happen here, I think, is that how many on Rand dollars we went from 813 Rand dollars up to 2,000. 1989. Now you're back at 13, so you can picture, that's a 0.382 retracement off that move, and you're back with light volume. Now this is where we get action. If we go, let's go over inside our markets, and this is where the deal is: nothing goes up forever, nothing goes down forever. So we had hit 90 cents on Friday. I think a lineup like get 79, like 73. If we could get in there with light volume, wouldn't be bad. See, like today, you already get 843,000. Like that's too much the first day.
Sure.
Yeah.
But
I think that's going to be a good setup. Because I don't think the aspect of one guy coming or going is not going to run the whole country in the Rand. You know what I mean?
I agree.
Yeah. Look at this, man, folks. This is this. I've seen, I like volatile markets, but this out here this morning is absolutely amazing.
Why don't you pull up maybe something on just a shorter term chart, so you can really see the intraday.
So if we pull up the S&Ps intraday, what you're going to see, ESH6, we're in, because isn't it hard to believe we're 2016?
I know.
It's a mind blower. Okay, so.
Zoom in.
Let me get this, and we'll put this back in just 2 days. And what you're going to see,
we're testing this lower level
we just went from 2019. That's amazing, man. That's 19 plus 6. So we've done 25 S&P points, and the market is opened all of 60 minutes. And this is going to go after the lows, looks like from 0600 this morning.
I tell you, could you even bring it down? Here,
yes.
I can.
Yeah, you can do it.
What are we on here?
You can do it
I want to get smaller than 10 minutes.
I believe you can. Let's see. I think.
Oh, yeah. Here we go.
Way over there. Oh, there you go. Beautiful. Oh, my God.
So this is what, look at this minute bar. This is a minute bar.
Now, that minute bar,
we went all the way, we opened it under 2,000.
Yep.
Went up to 2014 and closed at 2,000.
Right. So watch.
We went up almost 0.75% and pulled back in the span of 60 seconds, 0.75%.
Right. Now, what we don't know, but when you see something like this, all right, okay, so watch what this could have been. You see the amount of volume there is extraordinary, right? So when an operator wants to get shot, the way that, now when I say an operator, this would be the big banks. This would be a big hedge fund, a Goldman Sachs, someone that has, pretty substantial amount of money, right?
Yes.
What would happen is that they would look to the aspect and say, okay, we're down at 2,000. They want to get shot somewhere about 2010 or above that, right?
Okay.
Well, the way that a trade would be set up like that, it goes like this, folks. First, the trade would have to be put in that, okay, let's say a Goldman wants to sell 2,000 contracts at 2011, right? That's the first part. The second part of the trade, what they end up doing is that they just throw S&Ps, because like if you're looking at the E-mini, it's 3,900 contracts versus 6,400. There's plenty of liquidity there. They would throw huge amounts of buys at it just to drive it up, and as it drove up, it hits the stops because there's two different swing points there, and it's just hitting their own orders on the other side. Okay, it doesn't mean that that's what happened, but that's how those trades get set up, which are really cool.
Sure.
I mean, it's just cool understanding that too.
Yes.
And that's what it takes, though. That's what it takes to get off big trades.
Yes.
I
could see
that the stops are someone else's order on the other side.
For sure.
And we get volatility out here, folks. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Dow's down 80, Nasdaq's off 30, S&P's are down 8.5. We're going to be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We appreciate you growling and prowling with us out here. Right now, we get the Dow down 60, NASDAQ off 22, S&Ps are down 6.5. And, you know, if we go back to last Friday, so you had one mutual fund. We were talking about that, the mutual fund. They put the gates up of
High-yield bond.
High-yield bond of folks being able to take their money out of that.
Stop redemptions.
At this particular point. Well, over the weekend, there is a second high-yield bond fund that actually got out of the marketplace and got all their trades off and are giving all their money back. Now, what happened?
They're just closing shop.
They're closing shop. Okay, but the cool thing is, in their case, is that they're out.
They just want it out.
They're out. And so what the article was saying is that they had got a redemption in October, meaning, and they knew. Well, they felt they knew that at that particular point that was trouble.
They saw the writing on the wall.
So they saw the writing on the wall and they got out. What's important to understand, I'm going to bring up the HYG so you can see how this kind of works.
I mean, would you want to be in a high-yield bond fund as rates are going to go up, right? And you're going to have to deal with everything that goes along with that.
And it's destruction.
Right,
yeah.
right.
And,
I mean, they were in that, they created that fund probably for a reason, as in they were creating a fund like that around zero interest rate environments.
Totally. Totally. Exactly. And the thing that's amazing is that the market has been talking about this for a year, but no one's done anything, okay?
Reality setting in.
Reality setting in. Now, I just want to show
you. Market forces. I
want to show you market forces, how this works now. This is where this gets so deviant, folks, that it's just trading. It's not really deviance, but transparency basically will kill this market, and this is what it is. So if we pull up the HYG, which is the high-yield corporate ETF.
Is this the fund that stopped redemptions?
No. I just want to show you that how the tsunami starts, okay? So what happens there is that when you pull this down, now all these professionals absolutely have Bloombergs, right? And they'll search a lot deeper than we've just searched on this, but I want to show you something. So what happens is that as they search through it, you can pull up all the actual bonds that are not only in this, okay, but this is a good start because what ends up happening is that this has been going down for 6 months in price. Now, as an ETF structure goes down, what ends up happening, they have to sell bonds.
Yes.
So what ends up happening on top of that, though, it's transparent. They know the bonds they have to sell. All that does is accelerate the way down. Now, it had... And on Bloomberg over the weekend, listen to this. This is how sick this is. The spread between the buy and the sell. Remember you had said that they could sell on Friday. It just depends on what price?
Of course.
It was 10% lower.
That would make sense. It's a very illiquid market, probably, especially right now.
Exactly.
Who wants to, I'll buy those, I'll buy those.
No one's going to walk. No one's going to walk in the middle of it.
Right.
And the key, one of the keys will be, does that spread to better bonds? And my take is it's going to. If I've learned anything in the marketplace, it seems like they're always debt events. It's always someone owes money. You know, you can go right back, which makes sense.
Of
Okay,
course.
and then one blows
And
up,
it's
then the next one blows
of
up.
that debt that's really
Yeah.
seems to go on, because that's what, you know, they can't get out at that valuation, so that
Right.
valuation is not real. That's what always happens.
You know what blows my mind? So check this out, folks. This is what really blows my mind. Is that, let's say when treasuries are paying 2%, right? And a high yield at a certain point is paying like only 1.5% over that. It's like,
Yeah.
why would you take that risk?
I agree. No.
You know, you're talking very short, but they do. And it's
For
big.
sure.
It's
Yes,
big money,
yes,
man.
yeah.
It's big money. You know?
Yep.
If we go, let's go see what's moving the market here. If we go inside the Dow.
And just so people deal with a lot of pressures and expectations, and people are human, and people make mistakes, and that's what happens at the highest levels. Just to go
Yeah.
through that, you know.
Oh,
It's
yeah.
just people
Oh, yeah.
are just human like you and me, and they have hundreds of billions of dollars, and they have expectations to make more than the market, to make more than the Fed funds rate. You know, to
Right.
if what are they getting paid for if they're and that's
Oh,
so that's just how that quickly
they're-
unfolds. You
they're
know,
not
that before
immune to
it's-
greed.
Right. Everything.
In fact,
it's
you
just
know what
human nature that you can make mistakes, and with that type of money in play,
What I
they can
want to
still
do
happen.
is
just
I
people.
didn't in the morning. I don't put the voice on the TV, but I'm just watching Bloomberg with the scrolling across. And what they did, they replayed, and I'm hoping that we probably can Google this. They replayed the CEO of the fund that just put the gates up, and he
Okay.
got fired, by the way, Sunday
Okay.
night also.
Okay.
He started the fund, but he got fired Sunday
Okay.
night. They had that in August. He was doing a workshop, I guess, in a conference in New York.
Speaking.
And he was saying that, you know, things were good, and, you know,
Okay.
this is how it works. I've got to hear that.
Sure.
This
sure.
is
Sure.
August.
Yes, of course.
It's September, October, November.
Yeah, we're 6 months away.
It's
Not even, yeah.
It's that fast. So the strength inside the Dow Industrials today is that you have Travelers, that's up $1.24. Disney's up $1. You got Visa up 75 cents, and Walmart is up 30. Taken away from it on the way down, you get DuPont down 325. Look at that. DuPont is under. Oh, man, look at that. Unbelievable. So DuPont, the day before the takeover announcement, was $66.20. Spikes to 75, and it's at 60. It hit 66. Pretty
Yeah.
sick. So they get trouble in
The
paradise.
other lagger
there.
in there was Apple. Yeah, as you're getting back.
Apple's
to it.
the big one.
Almost down 2%.
Yeah, Apple's the big one, because what you have with Apple inside, it's amazing that.
Boeing, is that Boeing, right? BA
Yeah.
under there too. They're probably a decent one
Yep.
as well. Just to be a percent and a
yeah.
half. You know, that's a big
That's
number.
down $2.
Yeah.
And United Technologies is
Yeah,
down
that's a big
69
one, too.
cents.
So it's not small
Big
stuff,
industrials,
right.
yeah. Inside the NDX 100, what do we have? Strength versus a weakness. Strength is Electronic Arts. That's up 245. You get INCY up $3. That's been on a continual downtrend, though, but we seem to see that every day, up or down. Let me just see where that is in the context of, this stock, man. Look at how this stock trades. That's a daily. Is that a daily? That stock traded from $117 and $90 in one day. What a cycle stock, right?
And then it's back up there in 2 weeks.
Yeah, exactly. I know, it's
Yeah.
crazy. Let's see. Seagate Technology is this is a laggard. Oh, here first the leaders. Mattel up 73 cents, and Cognizant Technologies up 99. Now taking it down, Skyworks is down 315. What that's about? That's J.P. Morgan came out with a letter this morning, a note this morning, that the Apple suppliers look weak, that their sales look weak. The supply chain. So it's a fundamental deal. Seagate is down $1.30. You got Liberty off 121, and Staples is down 28 cents. The volatility's still out here. Not only out here, it's out here in spades, man. If we do go take a look at this Apple and just see, so Apple's done 20 million shares, and that swing point, I believe, is only 30. Yeah, it's 38. Apple's banging into that swing. Now, the intriguing part about Apple is that, you know, if you break into this, 108 is the high of the lows of the 24th. So
108.80 to me.
Yes, it should be. That should be really good support. If you break in, you know, that's a lot of shares that got sold. So the top of that should be decent support.
We're only $2 away.
Yeah.
230 away from that number.
You get some action there, and that could that would be some problems, no doubt.
It'd be interesting. I mean, I think we could obviously get some action today. Wednesday morning's just going to be absolutely nothing waiting for that to come out. But it'll be interesting to see how today sets up and tomorrow. Nobody's going to wait for Wednesday morning to make their move. They probably made it Friday in reality.
Right. And look at the dollar. I mean, the dollar is out here and it's pushing its lows. You're down 171 ticks. We have 16,000 contracts. And that's where the whole thing, on a fundamental basis, is hard to get your head wrapped around it, because if the rates are going up, the dollar should be going up and get stronger. But I think it's, we'll find out. It looks like bonds still want higher price. Dollar wants lower price. It's like, okay, where's the wrap going to be on this? I can't picture them not doing it, because it would be like...
I can't either.
Yeah.
It could be catastrophic, really, when because then you can't believe anything.
Just the opposite. Yes.
Yeah.
Like out of control.
You really just
There is no control.
You can't be so strong with your wording and the guidance.
Right.
That matters.
Yes.
And it can't just be like this. No matter what we say ever, you can't believe us, and we're never going to raise it, because part of what they do is they try and prepare the market.
Right.
So that it's not a one-day crisis event.
Exactly.
So, and that shock would be something they try to make sure they don't do, really. They try and avoid that.
I agree, man,
shock.
because the market, if they don't go up, folks, I think the market will be saying, what is out there that we don't know about right now?
Yeah.
What is the problem?
What are we ever going to believe in any statement you make besides an actual rate announcement from here going forward? Because it's, guidance is zero if it hasn't come yet.
Yeah, there's no doubt. And if we go, if we do go into that bond market, go into that 10-year, you can see all the 10-year has done is back down to right where it had the strength this last Friday.
Right.
It's on an intraday basis, folks. Okay, you have some volume down there, but just at intraday. On a daily, this is not volume. This is backing down with light volume, and it's just saying, hey, I still want higher price, which is just an absolute mind blower. Some of the higher volume stocks that we do have out here today. You get Apple's a big one. Let's see. Rubbermaid, I think they're getting taken over. That's down 349. GoPro, man, poor GoPro, man. I guess there's no one buying GoPros anymore, and you got Christmas coming up. GPRO.
You always hear about the conversation, I have CNBC on occasionally, even at home, or just whether you're at the gym, and they're talking about, who should Apple buy, right? Should they buy GoPro? Should they buy Tesla with all this cash?
Yeah.
And that's the argument, which I probably agree with, is they don't, just to GoPro, Apple can make a camera. What do they have that, and so that's where it's just a really tough business to. They were the first one to come to market with these amazing small cameras, but I don't think they have some kind of supreme patent that's going to take the world by storm. I don't think so. From the conversations that take place, it doesn't seem like they'd ever get scooped up for that reason. Some companies get scooped up for the patent because you can't create the company out of the blue. Apple could create that company out of the blue, and that's what they face.
Right.
In terms
and
of,
what's wild? So picture this. I went looking at a GoPro, right? And I saw how expensive it was, and I said, I'm not going to buy that.
I looked at them as well.
And,
I looked at them
I could
for a long time,
that's
comparing models,
that's
doing
really
everything.
unusual. I mean, I spend money. Do you know what I mean? It's like, I'm not buying that, man.
It has to be worth it, though. And it was, a good one, what, 400, 500?
Yeah.
That, right?
Yeah. And you know where my head went with that? It says, I wanted it when we were going diving, okay?
Sure.
And I said, I wanted it for a couple times. I said, hold it, man. What if I go
in the water for a couple times?
Yeah.
Right.
Well, use it 4 times? Yeah. Really crazy, man. Do you know what I mean?
Right.
And so I just didn't.
Right.
And then because I didn't, now this is how weird this is. Because I didn't, then I keep seeing it going down, and now I'm glad I didn't. And that has nothing to do with me taking a picture.
Sure.
Isn't that crazy though?
Yeah.
That's pure perception.
I looked at the same thing. I wouldn't have used it enough for $500.
Right. Right. I just blew my mind there with that much money, man.
Yeah.
It was,
Yeah.
Particularly because, like, okay, if you underwater,
everyone knows in your phone, not underwater, of course, but cameras these
but everything
days,
else.
you have such great cameras just in your phone alone.
Huge, absolutely huge. Let's go look at that gold contract, because there's no doubt that what we're going to have out here, folks, is that the metals market's going to continue to have high volatility, just as the dollar. And
just like oil.
Yeah, oil, man. We'll do oil. Right now, gold's holding. Bottom line is that we've got 80,000 contracts. I believe we're dealing with 209,000 at 1057. You know, hit 1065 today. What's going to help the gold market too, folks, is that on Friday we got down to 1061 at rejected lower price. So now we get volume Friday, and we get volume, the huge sign of strength, which is the prior Thursday. You know, so
yeah.
If we go over to that, let's go look at that oil market, because CLF.
I'm excited to see those pump prices when I fill up for gas the next time, man.
Huge.
I mean,
so oil has hit 34.53 today. You know, pretty intense.
I mean, I'm just looking. From November, it's down $15 off of 50.
Yeah.
November 1st.
How's that?
It is.
How's that? And you know what? I got myself a little education over the weekend. Right? We're at a party Saturday night, and you know it's just amazing. You never know who you're going to meet. Well, bottom line is I meet this guy, and he is one of the largest movers of number 6 oil.
Okay.
Now check out what number 6 oil is. I have to ask Andy about this. I pulled it up afterwards, man. It's really wild. So number 6 oil is, they take all the oil and put it in the refineries, right? And then all the stuff, the residue, that stuff after they're cracking all the bottles.
I knew it. It's going to be the bottom of the barrel.
That's
right?
number 6. Now check out how this works. But I really got a great education on how it works. So number 6 oil, we don't use it here. He ships it over to Singapore.
Okay.
But this is where this really comes in to make sense. Exactly. They use it in Singapore. They use it and because you need a separate. In order to make it heat, it's a higher heat you have to get going.
Okay.
Okay. And Carnival Cruise Lines uses it also. But check this out. He was just explaining to me the difference, because it's dirty oil.
I bet. Yeah.
So the law just changed, and thank God it did, is that Carnival used to be able to use it 12 miles off the coast.
So it just burns black, right?
Burns black. Now, and if you've seen them, have you seen? I've seen the you know, the cruises, how black it is when I've been out there. Well, now the law's changing as of January 1st. Thank God, they have to go up 65 miles, and I expect, you know, they're saying, does that have to do with you know,
climate accords? No.
Well, polluting the air. It absolutely does, because it's dirty. It's dirty. It's dirty oil. Yeah, there's no doubt about it.
You can't burn the bottom of the barrel,
no.
right?
And
I mean, you know what it looks like. Right, yeah.
You stay right there, folks. Tommy and I are coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and don't forget, folks, this is we have until December 21st for the Tiger Dollar sale on the front page of TFNN. You get a $25 bonus on buying the Tiger Dollars. They're good on all product at TFNN. They're totally transferable with no expiration date. We had a question, and what the question was in the den is that the 15-point spike at 1010 on the E-minis, do you think it was a large buyer or seller? And I think it was a seller. And I think the key there is understanding that, I mean, it's pure speculation. There's no doubt about that. You don't know whether they're buying or selling. But what I've found is that when you see spikes like this, and we'll put this on a 1-minute range, what normally would happen is that that's a large operator. They already had an order to sell at a dramatically higher price. They drove it up there, and that was their shot in the marketplace. And the reason I'm saying it's a sell is that if it was a buy, it should have held number one and they'd buy more versus the sell-off. So the volatility, you can expect the volatility to continue. The volume characteristic, let's see where we're at. This is heavy, man. So for a Monday, folks, this is pretty heavy. You're at 59 million already in the SPY. So if you just want to see exactly how the doors are never big enough to get out, we're at 59 million. We're
an hour and a half into
thank you.
6.5 hours.
And it hit highs at 95 million.
Yeah. We have 5 hours left in the day.
Yeah.
5 hours.
Huge. Absolutely huge. And of course, don't forget, we got our man, Mr. Basil Chapman, coming up next. And then we're going to go to Thinkorswim headquarters.
Swim lessons,
12 to 1. We got our man Steve Rhodes, 1 to 2. Dave White, 2 to 3. I'll be back here from 3 to 5 this afternoon. So every Monday, Wednesday, Friday, we get 9 hours. On Tuesdays and Thursdays, we get 10 hours. All of that right on your cell phone at tfnn.mobi. And if you take a look at if you are at TFNN, the Tiger TV, just hit Tiger TV, and it comes out. It comes in amazing, man.
HD, there you go.
Yeah, HD on cell phones, man. And you know what's so wild? I think it's so compacted on cell phones. It seems to look better in a cell phone than even on a big screen.
It can sometimes. The cell phone screens are so, especially if you have an iPhone, what is the full pixelation? I think it's over your computer monitor.
Is
so it really is more clear.
And you know what hasn't fallen apart yet, which is pretty wild, folks, okay, and I do expect you're going to see that, is the IBB. You know, with the NASDAQ down big, IBB still isn't falling apart. Now, you're pressing into lows out here today. We're at 319. You're only down 95 cents. But the low that was generated out here on Friday, and it did have volume, was 319.50. You did 2.6 million shares going against 2.5 million. You know, so it's subtle, but that is pushing down, and we are pushing down with some juice into that lower end. The natural gas, NGF6, this is just amazing. Look at that thing just gap down, man. Holy cow. So we've hit 186 on this contract. If we bring this back on a continuous contract, we take a look at this on a continuous contract, and this is trouble in paradise, man. So I just brought this back to 2001, 185, 176. Oh my God!
We're at some critical levels. We're approaching them at least.
There's no doubt.
Yeah.
You know, you've hit 182. The next, you know, a couple weeks ago when I was saying, hey, 182 wants to get hit, I was like, that's a.
I mean, I bet oil's a similar looking.
It is. CL1. Well. You know, this is what's left with oil. With left with oil, we pull oil up on a continuous contract, is the 2009 swing low. That's 32. Look at this thing, man. 32.40, and we've hit 34.50. So you're $2.10 away from it. You stay right there, folks. Man, Mr. Basil Chapman's going to come up next for you. And of course, don't forget about swim lessons. Thanks, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.